If you're anything like me, I love getting those dividend payments. If they're on a weekly basis, if they're monthly, if they're quarterly, absolutely love when I see that come into my account and being able to reinvest those dividend payments. Today's video, we're going to be looking at Berkshire Hathaway and where 38% of their portfolio is, getting some of those dividend stocks and making sure that you're getting those sweet returns. Now, it's no surprise when we think of Berkshire Hathaway, several of the absolute long-term stocks that they have carried, including Apple, Coca-Cola, and Visa, all do pay dividends, meaning if you're owning a lot of shares, you can create some really good dividend income. When we look at these three companies, they comprise, as of today, 38% of Berkshire Hathaway's entire portfolio. So let's see exactly what he thinks about it. So looking at Apple, this still is the biggest holding. As much as he's sold off, and I believe it was 9 consecutive quarters that he has been net negative, meaning he is selling more than he is buying, Apple is still 28.12% of Berkshire Hathaway's portfolio. So again, if you're investing in Berkshire Hathaway, could it be the one and only stock that you do need? Now, when we start looking at this tech, it's been kind of over the last 10 years, has a really strong competitive advantage, has a really global market, has a network effect, brand recognition, of course, on a global scale, meaning that it is really beneficial. And also they're signing some really cool contracts, which we're not going to get into in this video. But when you start thinking about Apple, a lot of people are saying that they might have had their day. They might not shine in the future as bright as they had, considering the iPhone no longer generates the same excitement that it did. If you remember release, and I'm old enough to remember it, when Apple came out with the iPhone, it was just an absolute game changer. Now, the company segment has also been gaining some different places, especially subscriber base, when it comes to Apple, when it comes to Apple TV, with over 1 billion paid subscriptions in there. Now, also thinking of AI, this is where I feel like it's going to differentiate between the companies that make it and the companies that are no longer in existence. Apple joined a little bit late to the AI field, and the company is known to make its own technology. When you think of the Apple, when you think of the iPhone, it seems like they're really predominant in making it and building it themselves. And with it installed over 2 billion installed devices, the company will really find ways to make more money out of their loyal base. Now, when we look at dividends, this is what we're focusing on in this video. The company has increased its payout by 92% in the past decade, which forward dividend 0.4 isn't impressive, but S&P 500 is only 1.3. So when you start looking bigger picture at Apple, very strong underlying business, incredible ability to generate capital, meaning they're not going to go anywhere soon. And I feel like when it comes to growth, when it comes to income orientation, they're going to continue increasing those payouts in the future. Now, second one, and probably the one that Berkshire Hathaway or Warren Buffett is really most known for, is Coca-Cola. They hold Coca-Cola in 9.32% of the entire holdings of Berkshire Hathaway. Probably one of the best and well-known soft drink in the world. Really the evolution of marketing demand, regional preference, and they really have everything. Coca-Cola is not just a soft drink company, offers alcoholic beverages, coffee, tea, water, healthier versions of all of their famous drinks, and much, much more. And they really molded, and the brand name and recognition logo is a global recognition. Now, when we start thinking of Coca-Cola, this is, of course, one of the big ones that is in the Dividend Kings running in that portfolio. 62 consecutive years of payout increases. Think about that, guys. 62 years of increases in there, which is kind of crazy. When you start looking at the consumer staples, when you start looking at something, where we might see market volatility, companies like Coca-Cola have always been super impressive and have really maintained through an incredible amount of time. You think the ups and downs in the market and everything else that they've been faced with, they have made a really huge. Now, cutting its payouts would be catastrophic to the company if they ever decided to break that streak. And of course, you could take a look at another beverage leader, which is the 50 years to join the elite club. But Coca-Cola will not and has not cut any of those portfolios. And really, even during a pandemic, the company didn't have many lows, really showing that it is a staple company. Now, the third one in here, he owns Visa at 1%. Now, this, of course, is a network that overruns and has facilitating credit card payments globally. When you think of Apple, when you think of Coca-Cola, when you think of Visa, they all three are global companies. Not only the company is not the issuing bank. So when I think of your financial institutions, you have your Chase, Bank of America, Wells Fargo. they are off the hook for consumer defaults because they are not the actual issuing bank. They are just the credit card processor or the facilitator of those transactions. Now, another thing that really makes it vital for this company is their network. When you start looking and the companies that accept the logo for merchants, vice versa, they do have a low transaction fee. So they're almost like a monopoly. When you look at Visa, when you look at MasterCard, those two cards almost have a dual monopoly of the industry, meaning they cover almost all of it. And of course, Visa boasts very strong gross margins and net margins when it comes to the company. Revenue has been doing incredibly well, and they have a well-established payment network, again, that is kind of global, adding fees to the cost and the consumer's cost of goods. In short, Visa is going to have strong operations in the future, generate excellent financial results, and the success comes from the displacement of cash and credit cards that people do carry. Cash, checks, still almost $1 trillion worth of transactions. But when you think globally, Visa is going to be here for the long term. Now, dividend yield, they are paying a 0.6, which of course, Visa has increased the dividend by almost 400% in the last 10 years. That is the reason why, as it slowly creeps up, as we see it, Berkshire Hathaway, and having it in the investment portfolio, makes a very terrific dividend growth stock to buy and hold for an extended amount of time. So it doesn't make sense when you start looking at Berkshire Hathaway, 1% of Visa, we have 10% of Coca-Cola, or about 10%, and then 28% of Apple. Now, if you're familiar with Berkshire Hathaway, if you're familiar with Warren Buffett, there was a time many years ago when he would not and did not invest in a lot of tech companies, but the times have changed. We're seeing a lot of the broadening, and a lot of people are also questioning what is going to happen to Berkshire Hathaway when Warren Buffett passes. Well, we know there's already been a successor. There's already been a number two that has kind of been named as taking over Berkshire Hathaway when Warren Buffett is not here. But what exactly is going to happen with the company? For that, guys, only time will tell what it's going to look like. But as of right now, a lot of people are still investing in Berkshire Hathaway and only in Berkshire Hathaway. When you start looking at the performance over the last multitude of years, usually outperforming that S&P 500. So even if you're holding something like the VOO, you could have Berkshire Hathaway and hold it in its entirety and outperform what we're seeing just with the broader market indexes, which is pretty interesting. So under the direction of him for an extended amount of time, I believe it's like north of like 20,000% return since Berkshire Hathaway has been around. So it's pretty impressive to see. So, all right, guys, so that is going to do it for today's video. Absolutely wanted to cover anything we have on Berkshire Hathaway. It's very cool to see where the portfolio and how they're still investing in the U.S. markets. He has said before, and he said it again, he is not leaving the U.S. markets. He is not going anywhere else. He is staying vested in the U.S. markets. Even though there are international investments, he is still rooted and really stuck into the United States and investing in our markets. So, all right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.